Hey guys, in this video, I'm coming live to you from Asahikawa, where it's snowing and it's minus 5 degrees. So what does OCBC results mean for you? What does OCBC results mean for you, the investor? Essentially, hey guys, so that was last night in the streets of Asahikawa. It's actually snowing, and as you can see from the window panes, it's actually still snowing and very strong winds, but more importantly, in this week's video, we're going to examine whether in OCBC's results will the bank continue to snow in terms of profits for this particular year, that's 2025, or does it mean that the other two banks, DBS and UOB, might be a better buy or better trading opportunity? So ladies and gentlemen, let's in this video delve into the like and my dislike on OCBC's latest set of results. Starting off, the first thing that I like, it was actually the sharp increase in non-interest income. At the group level, it was up 22% to a whopping 4.7 billion. At the bank operations level, it was up a whopping 20% to 3.5 billion. Not since the global financial crisis have you seen banks' non-interest income up so sharply in a certain year. But ladies and gentlemen, my take is that this will not be repeated because it was a one-off event, because of higher interest rates for the whole of last year. Moving on. The other thing I liked about it is that the NPL ratio was below 1%. Well, this is actually slightly better than the other two banks, considering the fact that the loan growth in terms of the loan book was actually pretty strong. This means that the quality of the loan at OCBC is probably slightly better than the other two banks in comparison. Now, the third thing I like is the exceptional spike in the wealth management fee. As you can see, ladies and gentlemen, it was actually up from 4.3 billion to 4.9 billion. It's like whopping, man. And at a full year basis, in terms of the AUM under management, it grew almost 400 billion or rather 40 billion, from 263 billion to 299 billion, ladies and gentlemen. Now, therefore, ladies and gentlemen, as you can see, this is actually my CDP statement on my latest stake in OCBC as of yesterday. As of yesterday, OCBC closed at $17.60. So my OCBC stake per my CDP statement is $1.361 million. My cost was $250,000 at 875,000 thereabouts, and my profits that I'm sitting on is almost $500,000. Yes, ladies and gentlemen, we have skin in the game, and that's why a lot of high net worth individual investors, a lot of family office, and a lot of index fund managers come to our investment classes, the next of which is actually on 17th of May. Do sign up if you want to actually find out, for example, that the other multi-million investments that we have that's worth 1.3, as you can see in my CDP statement over there, as well as 1.05 million. What is it? As you can see from our past videos, ladies and gentlemen, we like to throw in $500,000, $750,000 in the particular stock and see how it grows, especially when it grows to $1 million. That's how you make profits. You make millions with us. Another exceptional item for you, the traders, would be the exceptional trading income. As the name exceptional means, it is unlikely to recur again. You saw last year, the exceptional trading income rose 53% from 1 billion to 1.54 billion. My bet this year is that I don't think, with interest rate and with the tariffs from Trump, as well as essentially many other uncertainties has been introduced by Elon Musk, you're going to have a difficult environment. It will be an environment smuggled with a lot of uncertainty and volatility. So I'm not willing to bet that the exceptional item will continue to soar. Now, the other thing, income, ladies and gentlemen, that I don't like about OCBC is the fact that the NII, that is the net interest margin, have continued to slide from 2.29% in the fourth quarter of 2023 It's been just a straight line down to 2.15% as of the fourth quarter of last year. My bad, ladies and gentlemen, is that the other two banks, OCBC, UOB, and DBS, will continue to see this happening, and that's why in our last video I've mentioned that when DBS actually hit $46, I've already started to take my profits. And one of the reasons why is because we expect the NII to continue to drop, as what the other two banks have actually done. So next thing, ladies and gentlemen, is that I don't like about OCBC is that in the fourth quarter alone, there was a sharp jump in the cost to income ratio. Now, for the first time in a long while, it actually surged to more than 40%. It's actually up from a low of 37% in the first quarter of the year to as high as 45.7 or 46% as of last year. As you can see, ladies and gentlemen, in my past video on Singapore banks, you notice that one of the things we don't like about DBS Bank was the creeping up in the cost income ratio, because that's going to hit you sooner or later. And that's why when we actually took profit on our Singapore DBS Bank, as you can see, one of the reasons why when the share price crept up from $30 to 46. Now, $30 was a level that we recommended to buy for OCBC, or rather for GCP Global investors 3 years ago. We have made a lot of profit. In this case, we have already made more than 50% gain in just last 3 years. We reckon that DBS will continue to slow in terms of profitability. So you have to bear in mind, ladies and gentlemen, that the record profits therefore resulting in higher interest dividend payment, as well as introduction of a share buyback, which I reckon is not a good maneuver, because you're buying share prices at their historical high. Come on, ladies and gentlemen, what is it that you do not understand? Well, that's what we actually explained in detail in our classes, because we zero in on what management is doing or is in a position to do the next wrong. So we always look ahead so that we are prepped. So when negative surprises happen, you, the investors, are forewarned before. So you see, ladies and gentlemen, we delve into the results at core because that actually undermined the after effects. That is actually the profit growth, the NPL, and then subsequently the dividend. You notice most commentators like to talk about the dividends, record, as well as share buyback. But in reality, ladies and gentlemen, you can only do bad if the core operation continue to grow. And that's why in our video and in our classes, we only focus on the core profitability growth. So do join us. A good example of not following the crowd and being able to think in advance and preempt you is, for example, take a look at this chart. Since our video came out last month, as well as basically in our earlier investment classes, we have really told you that the outperformance of DBS were narrow vis-a-vis UOB and OCBC. And you can see, ladies and gentlemen, in the last 6 months, that gap has actually widened. In fact, there's no more gap between OCBC's underperformance vis-a-vis DBS overperformance. In fact, I think essentially it will reverse. So this is a very good example, ladies and gentlemen. That's because in our classes, we focus on the meaning of when and how to sell, ladies and gentlemen, because when it comes to DBS, for myself, I have 77,000 shares, like what I have in 77,000 shares in my OCBC Bank. The value has gone up tremendously, but when DBS is priced for perfection, as you can see, the price to book historical, is already close to its historical high that it has ever seen. So why not take some profits, ladies and gentlemen? In fact, in our last classes, I think we have attracted a lot of interesting people who enjoyed our classes coming for the very first time. If I may, I just want to share with you this gentleman. His name is Colin Lau. He actually is an entrepreneur and actually owns his own engineering firm. He says that, dear Gabriel and Carmen is my lovely wife. Thank you for both the insightful, lucid, and meaningful sessions yesterday. That was actually in our last class on 8th of February. He says that he first got to know Gabriel through the book many years ago, but then he attended a couple of other stock investment courses during the COVID period. And in other courses, they actually have this vague and pay to know more approaches to investing in the stock market.
among others, left me with a bad taste. Ladies and gentlemen, for the last 36 years that we teach, we only aspire to give you one thing: the top quality, best research done in a very insightful and done in a manner where we have an opinion. We don't actually put a hold on recommendations, either buy or to sell, and to sell when and to buy when. So, um, Colin Rothard says, thank you for your opportunity to join this family. Yes, ladies and gentlemen, once you attend GCB Global Investment classes, you join our family, for which you'll be invited for functions like this, as well as this. You actually get to meet even more prominent investors who will then help you to multiply your millions with us. So, hope that once again that you enjoyed this week's video on OCBC.
So you see the snow below, ladies and gentlemen? Yes, yes, yes. The town is covered up by snow. So if you want to know which stocks is going to help you snow in the profits, ladies and gentlemen, join us for our next week's video. And yes, after my coffee over here, it's time to go running in the snow so that you can clear your mind and be able to identify which is your next best stock, which I will share then in my next class on 17th of May. Once again, have a good night coffee and join me for the snow.